When I began at Cato, and this was the first issue that I was tasked with addressing, it seemed to me that the objections to ride-sharing broadly fell into issues relating to economics and regulations, and then also this safety issue. And as briefly mentioned, I wrote a paper on it, Is Ride-Sharing Safe?, which is out front. And there's going to be a little bit of overlap with what Mark has said, and I also want to address a little bit about what Dean has said. But to begin, I thought I would discuss something that really struck me when I began doing work on this issue, which is that being a taxi driver or being someone that picks up strangers for a living is very dangerous, and we need to appreciate this. These are very familiar scenes if you're in New York or abroad. I felt, as an Englishman giving a talk about taxis, I have to include the iconic Hackney black cab here. And as Mark does sometimes, he mentioned hitchhiking, and this is a great quote from the director of the International Taxi Drivers Safety Council, which is, if you're working as a cab driver, you're really picking up hitchhikers for a living. And I don't know how many of you ever had a parent who said, I really recommend you hitchhike, or I really recommend that you pick up that hitchhiker. But people do this every day, and it's a dangerous job, and that should be appreciated. And it makes it's only one of the factors that makes the job dangerous. Another is taxi drivers can reliably be assumed to be carrying cash. This is increasingly not the case as more taxi drivers use credit cards. But the criminologist Marcus Felsen called cash the mother's milk of crime. A whole array of homicides and assaults are motivated by the acquisition of cash. And the fact that taxi drivers are picking up strangers and they often carry cash really does make them an attractive target for assaults and homicide. Thankfully, the Bureau of Labor Statistics does keep records of people that are fatally injured or murdered on the job. And starting this project, I was, perhaps like a number of other Americans, despite the accent, I am actually a naturalized American. But I thought of, well, policemen must have a very dangerous job. They are often killed on the job. Firemen probably have a very dangerous job. Now, these figures are from 2006 and 2011, and in all but 2 of those years, more taxi drivers and chauffeurs were killed on the job than policemen. And actually, as you can see, in 2010 and 2011, civilians died on the job at a higher rate than firefighters. These include homicides. In the paper that I wrote, which I recommend you all pick up, by the way, above 50% of these fatal injuries for taxi drivers are actually homicides. It's a very, very dangerous job, and I think that should be appreciated in any discussion about regulation on ride sharing. So to recap, taxi driving is dangerous, picking up strangers and cash, and something that I think is really interesting about Uber and Lyft is the way that they make this actually a safer experience and addresses these issues. I didn't know when I came here that I would be discussing Dean's mother, but I have a great chance to do this now. I'm sure she's a lovely woman. But something I wanted to discuss is that Uber, Lyft, and Sidecar get rid of the number one issue because the drivers and passengers are not anonymous. There's a two-way rating system. Passengers rate drivers, drivers rate passengers. And if I took a ride with Dean's mother and thought she was a great driver, I would give her 5 stars, and perhaps if not, 1 star. Uber and Lyft, probably the 2 most popular of the ride-sharing services, are very strict with the ratings of their drivers. Drivers regularly get booted if their rating drops below a certain amount, which is a good thing, and also drivers rate passengers. So if you're a belligerent drunk on U Street at 2 a.m. on a Saturday, chances are you might not get a 5-star rating from your driver and are less likely to be picked up in the future. And as Dean mentioned, the payments are made automatically. There's no cash. So it removes an incentive. It seems to my mind that if you wanted to commit a crime in an Uber car, you would have to want to be caught. It is a detective's dream to have well, where was the perpetrator? Where was the victim? What were their identities? And what was the location of the crime? All of these are answered in the ways that Uber and Lyft carry out their business, and that should be something that we all praise. And Mark is right, I do want to mention insurance, because I think it is a legitimate concern that people ought to be worried with. So to start off with Lyft, what I want to discuss briefly is the degree of insurance that is in place when the app is on but a driver has not found a passenger yet. This is the gray area that has really been highlighted in this debate. The unfortunate incident that always gets referenced is in San Francisco, a young girl was killed on New Year's Eve after she was hit by an Uber driver who was in this phase where he had the app on searching for passengers, but he hadn't found one yet. Now, the interesting thing about this is that what you see here, the degree of coverage, it applies if your personal insurance doesn't kick in. So Lyft offers some sort of umbrella coverage. And once the driver has accepted a ride request, there's a $1 million per accident liability. Uber has an almost identical policy in place, but recently something very interesting happened, which I want to discuss in the context of ride-sharing and insurance. Mostly that in Illinois, Washington, and California, Uber is partners with Metromile, which is offering pay-per-mile coverage. And this has well, before I describe in detail, I think it's worth mentioning this works with Metromile giving the driver a dongle that they can plug into their car, and it tracks the amount of miles driven that are for Uber and then also those that are personal. So they actually cover this controversial period 1 that is often cited. So if you have Metromile coverage in these states and you're driving around, roaming, looking for a passenger, you are covered by Metromile if you go for it. Now, this is something we should actually expect. I think it's important to highlight the fact that the insurance industry is interested in this new and innovative industry, ride sharing, and it offers a lot of good services for them. But in order for products to be developed and in order for this to move forward, there needs to be a predictable market and there needs to be a way for insurance companies to feel comfortable. And at the moment, I think in many parts of the country and in the world, they don't. Now, this is the obvious question that I get asked a lot about, and I wanted to highlight a slide that was presented to the San Francisco Municipal Transportation Agency by San Francisco's Taxis and Accessible Services Interim Director, which is the impact. TNCs here refers to transportation network companies, and the city in being addressed is San Francisco. And as you can see, these are the average trips per car. By car, they mean cab. And as you can see, I mean, timeline-wise, UberX, which is Uber's rideshare service, launched in 2012, as did Lyft. That's the same year. And the number of trips has declined dramatically. And of course, correlation isn't causation and everything, but I think it's worth keeping note of this graph. Now, in order to compete, taxis could copy a lot of what Uber and Lyft have developed, which makes it very attractive, like the rating system and the personalized sort of service. And My Taxi, which I have on my phone, is a Germany-based company that allows users to do this in Washington, D.C. There's also Halo, which some of you might have heard of, offers this service. It's actually based in Europe. You can download it into Halo Taxi. But interestingly, Halo left North America citing the competition between Uber and Lyft, saying that they couldn't handle it. And I mean, I think that taxis are not, destined to go extinct. They might be, becoming an endangered species. But in order to maintain their relevance, they really do have to crack into what makes Uber and Lyft so appealing. So, I mean, to round off at the end here, I want to discuss. What Dean said, there are legitimate issues here, but it seems to me that the question needs to be asked, is it the case that because something is a legitimate concern that the government has to regulate it? Uber and Lyft have both shown that they are very interested in making sure that background checks are carried out, which Dean mentioned. In the paper, I discussed that actually Uber and Lyft's background check requirements are oftentimes stricter than many of the taxi companies in this country. It is also the case that their insurance coverage compares very favorably to taxi companies in this country. And so I think before we jump in and say, should the government be regulating this, we should ask if rideshare companies are able to do this themselves. And it seems that they have demonstrated at the very least a willingness to change. Uber in particular, which has not enjoyed a good few months of PR, have announced that they're going to examine their data privacy policies as well as their background check policies in light of some disturbing news from India. In case you don't know, there was a Uber driver in India who admitted to raping a passenger. Although my research has been focused domestically, so I'm not sure on the background check systems that are in place in India, but I am interested in the outcome of all of this. As Mark said, regulation comes with risk. I'm worried not only with what Mark mentioned with regulatory capture, but I'm also worried about regulating a new innovative industry as if it's an old thing. So the idea that we should regulate these companies as if they're taxi companies seems to me incredibly misguided. To me, it seems that Uber, Lyft, and Sidecar have more in common with eBay and OkCupid than they do with taxi companies. These are technologies that allow riders to find passengers and passengers to find riders, and that should be something that we consider moving forward. And the stifling of innovation. At the moment, I'm glad that Brink mentioned the Ubertarian. It seems to me that libertarians spend a lot of time praising these disruptive technologies, but as Mark said, in the future they might engage in behavior that is contrary to the principles of a free market, and that is something that we ought to worry about. And something that I know Mark and I have discussed before is that at the moment we know Uber as a technology company that's interested in transportation, and there have been all these carves out for TNCs. But what happens in a few years if Uber decides to compete with logistics companies like FedEx or UPS? Is the transportation network company designation going to be helpful then? It just seems to me that this is all has the potential to be a giant mess, and I think the way that this should be addressed going forward is to deregulate the taxi industry. I think we really need an environment where taxis can compete with these new companies. I think what Dean said is very interesting about the takings. People who have invested in medallions are understandably upset. You know, they've invested time and money into what they thought was a secure job, and that ought to be considered.